Hello, friends. I'm Vijay Bhambwani, and I've been trading these markets since 1986. I run a proprietary trading a family office company, and through these podcasts, I'm trying to reach out to fellow traders, take better investment and trading decisions. Now, before quitting your job, before actually plunging into the world of professional trading and full time trading, there are a few things that you might want to consider. And this podcast is all about what you need to know before you chuck your job. Chances are you're probably a young trader or maybe even a seasoned veteran who wants to make it big and that too real quick. You've watched many YouTube videos on trading techniques, charting, statistical analysis, and screen reading, etc. You've seen Leonardo DiCaprio in The Wolf of Wall Street, and you want to hit the track with big game trading. Super large and quick profits, fast cars, and maybe even hot girls on weekends. You may have a job currently and you're itching to quit the job and be your own master. Why live like a slave to a monthly salary? Now, you dream of getting out of bed a few minutes before the market opens. You want to sit on your laptop and or maybe your cell phone, make a few tens of thousands of rupees by late afternoon, head out, hit the track in the evening for fun and frolic, no overtime at the office, answering a boss who presents you with difficult situations that require near impossible solutions, that too on a very tight deadline. No way. Being a professional trader is anyway and any day more cooler, and you can show your rival cousin who's the boss. Now, as a pro trader, I'm with you, but let's have a checklist of things that you'll need to ensure before your journey as a full time trader can begin. You'll need a few types of capital. Now, I'm using the word capital because this is really capital. Number one, financial capital. That goes without saying. Trading for a living requires money, period. The old saying, it takes money to make money, is actually true. If you want, I will record a separate podcast on exactly just how much capital you need to set up a desk as a pro trader. For now, suffice it to say that it takes at least 1.5 lakhs, which is 150,000 rupees, if not higher, to trade one futures lot in a derivative stock or maybe even an index. Most counters will require a far higher amount. That doesn't include the mark to market losses, which have to be paid in cash. The span margin you might be able to give as collateral partially. And then comes the exposure margin that is imposed telescopically whenever the MWPL or market wide position limits rise above 60%, or maybe even ad hoc margins which are imposed telescopically when statistical beta or volatility of a counter rises suddenly. Now, if you need to average your trade, then your capital requirements will balloon significantly overnight. Remain assured that you need far more and far bigger sums than what the average online legends advocate on social media. Now, borrowed money is out of the question because it creates emotional and physical stress far greater than other burdens that you can imagine. Don't break your fixed income or savings to trade either. Stories of business tycoons who've come up the hard way in life after selling their family jewels are a great motivational factor, but they weren't stock, commodities, or forex traders. And these are more of exceptions than a rule. People from my community, the Sindhi community, teach their kids that they must accumulate enough in fixed income investments that should yield enough interest to take care of their survival and lifestyle expenditure before starting riskier ventures. Now, if your monthly survival expense is rupees 1 lakh, which is 100,000 rupees, and the interest, which is, say, a hypothetical ballpark figure, post tax is 6% per annum, which is half a percent a month, then you need to set aside 2 crores of interest bearing safe investments before dreaming of trading, for which you will need separate capital again. So, do you think you can make do with small amounts of money? Hey, wake up and smell the coffee. When you have sufficient capital and your account is well funded, you don't have to surrender your trades in distress because it's month end and you need to pay your utility bills. That is the most demoralizing thing that could happen to a trader. And then you must set aside some more money for life's contingencies. For example, I have two super senior citizen parents who could need medical attention anytime without a warning. I need to keep money aside that must never be touched for trading. That money is kind of mad money set aside for emergencies. Now, capital affords you the luxury to trade. No capital, no trading. It's actually that simple. Which is why a monthly check is irreplaceable at these times. So, before quitting your job, you need to understand this aspect. The second type of capital that you need is emotional capital. Yes, your psychological nature or psychological characteristics can also be your capital. I always tell people in our debates and in our discussions on behavioral finance that I am a student of that trading is exactly like sex. You think it's your body performing while you're at it, but it's more of psychological strength that is at play here. Trading requires tremendous amount of mental tenacity. The reason most traders fail is because they buckle under the stress of a mark to market loss on their terminal screen. This kind of pressure is not something everyone can take, and in your initial stages as a trader, you may have a string of losses day after day or maybe even week after week. You need to ask yourself and answer yourself very honestly, can you get on your trading terminal day after day and start trading without a hangover of the previous day's trading losses? Or think about this. There are 20 trading sessions in an average month. Like I said earlier, if you hypothetically require 1 lakh rupees a month to trade, to survive, you will therefore need to make a trading profit of 5,000 rupees a day. Now, if you made 5,000 rupees on day one, it's not that you won the entire month. You've just done your job for that particular day. But for whatever reason, if you don't trade on day one, you will need to make 10,000 rupees on day two just to meet your monthly target. And what if, and this can happen anytime, what if you lose 5,000 rupees on day one? Hey, in that case, you need to make 15,000 rupees on day two just to maintain the monthly average. Now, don't think for a minute that the pressure on your mind will be three times because you need to make three times more money. It will be closer to 20 to 30 times more. Now, only you can determine if you can take this kind of mental stress. Compared to a monthly salary after slogging in the office for 30 days, and whether you are up to the stress of living in fear of a loss, you might even experience a loss of morale, lack of self confidence, and low self esteem. Your night sleep could be disturbed, and be honest about whether you can actually undergo all this before quitting your job. So, think 10 times before putting in your resignation. Now, the third type of capital, the physical capital. I've been trading since 1986. That's when most of the newbie traders who are present in the market today weren't possibly even born. When I tell you trading is a physically taxing activity, please take it at face value. Sitting long hours on the computer trading terminal requires physical strength, and it causes tremendous amount of strain on your lower back, the lumbar region, and it causes computer related injuries like lower back pain, wrist and finger pain, shoulder and neck pains, etc. The pressure on your mind manifests itself on your body also. High levels of stress triggers elevated heartbeat, means faster heartbeats. High levels of adrenaline, especially when your trades are losing money. Now, excessive adrenaline can in turn trigger to excessive cortisol levels in your system. Cortisol is a chemical that is produced by the body during times of extreme stress. Now, that over a period of time results in a puffed and swollen looking face. Most traders will mistake it for weight gain. If you notice a trader who's thin in his body, but his face is looking much more bigger proportionately as compared to what you've seen him in the last couple of years, remain assured this is cortisol related stress which has puffed up his face. Insomnia and rapid breathing are other side effects of not being able to take the stress of trading. If you notice darker veins on the back of your hands, puffy face, that too without any tangible weight gain, you may want to cut back on the stress or consider sticking to your job. Maybe you might consider trading while still retaining your job and trading side by side. Trading is exhausting and a tired mind bogs down the body even further. If you're trading commodities the way I do, your market opens at 9 a.m. and shuts at midnight. So your trading time is 15 hours, and pre-trading and post-trading preparation and research could be another 3 or maybe even 2 hours. So your average working day will be 17 to 18 hours. On weekends, you will be tweaking your charts and sharpening your tools. I believe in statistical models and behavioral analysis models. I keep updating them over the weekend. So it's sheer hard work. Believe me, it takes a long day and extreme amount of motivation to keep pushing your body. I'm 58 years old, day after day, year after year for 37 years, and not everybody is up to it. So you need to be honest about it, whether you can actually take it, and whether when you can take it, do you actually want to take it. Now, like I said, since the mind will be tired, it will tire down the body also. And when you're in distress, your mind starts triggering chemical reactions, especially from your prefrontal cortex. Now, that is a part of the brain that is responsible for short-term decision-making functions. Your prefrontal cortex starts working frantically and it starts burning calories twice as fast. That explains why traders tend to feel hungry and eat more, especially when they are under stress and they are going through a loss-making phase in their trading career. This leads to thickening of the blood and sluggish feeling in your body and in your mind, especially in the speed of taking trading decisions. Now, ideally speaking, traders should sip. I'm not talking of a full glass, just a few sips. Traders should sip water every 75 minutes, 75 to 90 minutes in very, very small quantities to keep the blood thinner and keep breathing deeply rather than having small, shallow breaths. That way, your blood is thinner and deep breathing causes higher degree of oxygen in your blood and in your vein, so that your mind is agile, it's quicker, it's more rational, and it takes trading decisions faster. Now for the fourth type of capital, the intellectual capital. You see, up to the 1990s, before starting out a business or any commercial venture, financial capital always played the biggest role. If you didn't have money, you could not do anything at all. But as availability of capital became more and more abundant, thanks to rising disposable income in India, people started realizing that intellectual capital or ideas, knowledge, skills are actually as if not more important than financial capital itself. So financial capital can be arranged, it could be borrowed, although I told you earlier borrowed money for trading is not good. but I'm stressing the point of intellectual capital here. What do I mean by intellectual capital? Sheer cutting edge knowledge. We in the business of trading are not in the business of certainties. We are in the business of probabilities. Now, when you're betting on probabilities, you need an edge. What kind of edge? Knowledge. What kind of knowledge do you actually need? First of all, you need the big picture knowledge or the 360-degree worldview that I so talk about so often on social media, on my social media accounts. You need the bigger picture of what time cycles play out in what particular asset class. How does the weather impact crude oil, natural gas? How do wedding seasons impact gold and silver? How does the festive season in the second half of the Indian financial year, which starts in April and ends in March, how does the second half of the year impact consumer spending companies like FMCGs and automobile companies, etc.? So you need to know your business inside out. Then the more micro skills, technical analysis, knowledge of which is a must. Now, two different people could view a chart in two radically different ways. Obviously, the guy who is right will win and take the money of a guy who is wrong. So, you need to know the right thing. Screen reading skills, always very, very important. If you don't know how to read the signals on your screen, trading terminal screen, you are going to lose. You should also have some knowledge and essentially build some statistical system of trade, a statistical model of trade. We have two models, IBEX for statistical data analysis and Barracuda for behavioral finance analysis. Now, these pick out trading signals from all the numbers that are thrown up at the end of the day by exchanges. So, having knowledge automatically puts you ahead of the crowds, helps you legally, ethically, morally to take money out of the other guy's pocket and put it in your pocket through the exchange traded platform by making the right trade at the right time and at the right price. So the fourth one, intellectual capital, is actually extremely important. So, should you quit your job to trade full time? Do you have enough money set aside in fixed income to run your house on interest income alone, plus have more money for trading capital? Can you take the stress of trades going against you for a few weeks and still continue to do your daily bit? Preparation for the market for a fresh day of trading ahead of you, that too with a cool and rational mind after having a losing streak. Does your heart beat faster and breathing accelerate when your trading losses are escalating on your screen? Do you lose night sleep when you lose money? Are you eating more when your trades are loss making? Is your face puffing up? If yes, these are all signs that you still need the comfort of a monthly check for some more time before you chuck your job and become a full time trader till you're totally ready financially. Thank you for your patience. Till we meet again in my next podcast, I would request you to keep your feedback coming and tell me what else do you want me to record in my future podcasts. Also, please help us to reach out to a bigger audience by sharing our work. It's free and it always will be. Do join me on social media where I share a lot of thoughts and data and studies from our statistical trading model. Details and contact coordinates are available at the end of this podcast. Have a very, very profitable day ahead. Take care. Bye bye.